Hello everyone, I hope you're all doing fantastic on the 19th of May 2025. My name is Marcello Kolax and I am walking you through the European energy markets today. So yes, for the third week in a row, no face, what is going on? So I am still on the move. I was at a few conferences over the past couple of weeks. I was a speaker at the X Energy Exchanges conference in Greece, and then I went over to Amsterdam where I hosted a Clever Markets Technical Analysis Masterclass at the Flame Conference. And what I found really interesting at both events is that the market seems to finally be acknowledging that our industry has changed permanently and there's no going back. So sophisticated players have entered the market. And at the X Energy Exchanges conference, I was presenting the results of our very competent quant team, and they ran their proprietary algos, and they figured out then that since mid 2023, the classic or more simple trend following methodologies have no longer been yielding any meaningful P&L. Rather, the market has moved over to a mean reversion mode, which simply means the market is going up and down, mostly sideways. So that means more sophisticated players are now making bank, and that is mostly investment banks, portfolio managers, hedge funds, many of which I advise. So I have seen the shift as well. And they simply look at technical analysis for their main, trading strategies. So no longer fundamentals, that is out of the window. The summer-winter seasonality also no longer works. And now finally, we have the numbers. So what you have been feeling over the past year, that trends have become shorter and the market is more irrational, in quotation marks, all of this is real. And there is no going back, unfortunately, because all these option players are thriving on volatility, and options volume have significantly increased also over the past year. Okay, so now let's move over. Let's have a look at the European energy markets. So here, a little disclaimer, everything you see is just my humble opinion and of course not real trading advice. So what you saw from one week to another, and this is chiming in really like with the theme of indecision and the market moving sideways. So week on week, the market is still neutral. So the bulls, the bears are still evenly matched. However, the share of indecisive traders has significantly increased. So from 10% to 19%. So the market is growing increasingly indecisive. And what does that mean in practice? So here we are looking at the TTF front month, the NBP front month, TTF front season, NBP front season, EUAs, German power, what is this? Henry Hub and Brent. And you can see for the most gas and power markets, all of them that I'm looking at, even EUAs as well, everything. We have been moving sideways for over a week now. Nothing is happening and there is no trading opportunities on the daily chart. So there's only maybe some spec trading or have been last week, some spec trading opportunities on the 15-minute chart. I don't even want to say on the hourly chart. So this has become really tricky for physical traders. Also, they are kind of in a bind. The market isn't going anywhere. There is no clear indication of where we might be going next. So if you have to log in some volume, it's difficult, absolutely. So let's have a look at the individual charts to maybe get a hint of sanity. So we can see that on the daily chart, on the weekly chart, the market is clearly in a downtrend. We have been pushing higher for like 3 weeks, but on the grand scheme of things, this is only a corrective up move in an underlying downtrend. And this corrective up move is now playing out on the daily chart as well. Can you see we have been moving lower with the channel or without for the most part since February 2025. And now only recently, last week, we have been pushing out of this descending channel. Now here's the thing. By textbook, we would say that 2 consecutive closes above the channel unwind the downtrend. So we have 1, 2, right? So this happened on the 12th and 13th of May. Cool. So, but are we bullish now? No, I think if anything, we are rather sideways on the daily chart, because you can see the market hasn't pushed higher on strong volume or with great bullish conviction. No, we are simply moving sideways because the market is indecisive. Like the real bullish confirmation would only come above 36.42, which is his most recent peak, which has been hit on the 12th of May as well, kinda. So I want to see above a move. I want to see a move above that before turning like full on bullish. On the daily chart, we also see that the MACD is pushing higher, which is a bullish signal overall. And you can also see that the 8 and 12 exponential moving averages have been moving higher. So overall, rather bullish. But look at this. The ADX, the average directional index, the white line here, was it yellow? The yellow line, is it white? Can't really tell, has been moving below 20, which means that the market doesn't have a real direction. We can also see that red and green, so the bulls and the bears, are both pushing lower. So that means the bulls are not in charge, the bears are not in charge. Overall, nothing is really happening. And that is simply a reflection of the market here moving sideways. Stochastic isn't really, maybe not really giving us a clear signal. I mean, we did get a bit of a bearish crossover here as we moved below overbought territory, but nothing is really happening. The market isn't moving. So for now, I'm still rather inclined for the market to push higher eventually, maybe reaching the 41 area, which is the 200-day exponential moving average. But first of all, what we really need to do is move past this rectangle on the hourly chart. So you can see 34.3, 35.93, the market is moving sideways, even like 36.42 if you want to be so inclined, but overall sideways, right? And you can see how the trading opportunities are really limited here, if anything. So you don't really get any good trades in on the hourly chart. You really have to move in maybe even shorter on the 15-minute chart. So we start dealing with the swings, but overall there's no real trading opportunities here. I want to see them break past this, and you can see my preferred direction overall is still bullish. I mean, we are remaining within this rectangle for now. But overall, I do believe that bullishness is possible, and a move above 35.93 could lead us to 37.51. And however, if we should push lower past the 34.3, we could easily make it towards 32.5. Okay, so the TTF front season, what's happening here? More or less exactly the same. We are still in a flow of lower lows and lower highs. This old ascending broadening wedge, I only leave this on because it somewhat coincides with the 23.6% Fib retracement. So a good peak, so a good target for us to pull back before we continue lower. And you can see here this upside correction, what it looks like on the daily chart. We have pushed above the descending channel, but as you can see, exactly the same as on the TTF front month, no conviction. The market didn't push above the channel because the bulls are convinced, but rather because nothing is happening, right? So we are pushing sideways. Are we bullish? No, absolutely not. I want to see a move above 37.43, maybe even 38 to be completely honest. Yeah, maybe somewhere up here. Until that happens, sideways. And I think we can push higher. That would make sense, possibly towards the 200-day exponential moving average near the 41 region. So what to do this morning? I want to say probably nothing, to be completely honest. Like here, once again, the trading opportunities are limited to the, not even hourly chart, 15-minute chart, 5-minute chart, but this is getting too tight. It's too volatile. No, there's no winners in here, honestly. So I want to see a move below 36. That's the alternative case, in order to, turn bearish, put an end to this sideways trend and also upside correction. On the daily chart, more likely, however, I mean just slightly more likely, there's no strong preference, a move above 37.48 or 5, or if you want to call it 37.75, only a move above this area would continue the intraday uptrend and also the daily charts up leg as well. Here the rectangle upside target is in the 38.95, 39 we could call it. Now, German power. On the weekly chart, it becomes really clear that this horizontal trend line near, I'm going to say 80, has held since May 2024, so over a year now. And you can see we have pushed higher once again, so this was to be expected. Maybe move towards the 61.8% Fib retracement at 93. I want to say, is possible. I think it's nothing crazy, but do be careful because we do have on the weekly chart um, uh, not quite a shooting star because it isn't really confirmed. So this is usually like a potentially bearish pattern, especially here at a 38.2% FIB retracement of 88.28. But honestly, I think we can push higher. I think I'm really on fire this morning. I talk really fast. I don't know why. I am still plagued by the jet lag, which is the main reason the camera isn't on today. And I woke up, so I'm back in Singapore. It's 6:30 a.m. I woke up at 2 a.m. I've been working ever since. So maybe my brain is just fried and I'm just getting out all the TA as it is passing through my head. I'm very happy that you're bearing with me. Thank you very much. If I'm doing this for you, if you enjoy this, if you find it useful, let me know on LinkedIn or on YouTube. Okay, cool. Let's continue. All right. Here on the no, what is this? German Power daily chart. You can see 1, 2, 3, 4, 5, 6, 7 maybe. So nothing has happened for the past week and a bit, but overall, I think it kind of makes sense to retain the bullish outlook. We are above the 200-day exponential moving average, and the momentum is bullish. And I only put on these fibs in order to get an idea for this down leg here. So up until the 61.8% fib retracement at 83.70, even if we push down here, the bulls still have a chance at continuing. The bulls will immediately continue above 91.05. Okay, so on the hourly chart, you can see not much happening here over towards the end of last week. I keep an eye on this range, 85.89, 90.49. If you're so inclined, if you want an earlier signal, why not this? Yeah, 87.15, 90.49 also makes sense. So if we see a move past that range, then either the bulls or the bears would be back in charge, which would then have an impact on this on this daily chart. On this daily chart range that we are currently working. So either we continue higher or the uptrend is over and we try another push lower towards the 83.7. Okay, EUAs on the weekly chart. Dramatic. It always looks so dramatic. So this here is called a gravestone doji on the weekly chart. So it simply means really long up wick and almost no lower body. And this looks like a Japanese or rather Asian style gravestone. And the Japanese gravestone looks like this. So now I hope you can make the association. So this is a gravestone doji essentially. Okay, so what does a gravestone doji mean? So gravestone doji usually leads to losses. It happened on strong volume. So here I'm still a little bit split, to be completely honest. If you want, you can put the R1 up here as well at the 75.02. If you're so inclined, I think that makes sense. A move above that area would put an end to the bearish setup here. However, if we push below 70.52, then the gravestone doji would be confirmed. Okay, on the daily chart, we saw that long ago we did push above the channel. Now we are a little bit sideways. We have been all last week, so a move above 73.82 would continue this up leg. I think that's most likely looking at the bullish momentum. However, a move below the 23.6% fib retracement at 70.52 looks familiar, right? It's a gravestone doji as well, and the 23.6% fib retracement on the daily chart. A move below that would launch a corrective down leg. But for now, you can see on the hourly chart still fairly bullish. We are within the ascending channel and we are bullish as long as we are within this pattern. Okay, so the last market that you're looking at for today is Brent, and you can see the midterm, longer term is bearish. Once we pushed past the 70, we kind of fairly quickly looked for the 60. So this was hit quite successfully. You can see here now we have like this flow of lower lows and lower highs, and I think this to be quite useful, absolutely, as a bearish indication. So it is possible we have just retested this old support level turning into the resistance near 68.71. So I think this is a good pullback area. So that's why that is my preferred scenario for now. But overall, if this doesn't happen, if we simply continue lower, we would know as soon as we push below the 38.2% fib retracement at the 63.64. So for here, overall, still rather bearish, even if we pull higher just a little bit. So on the hourly chart, we are just swinging sideways. I don't see much of a direction here, but a move above 66.81 would definitely put the bulls back in charge, whereas below 63.13, the bears would be. All right, everyone, I hope you enjoyed this. This was quite a whirlwind of technical analysis. Once again, the markets have changed. If you want to get in touch and switch things around, do let me know. hello@clevermarkets.com or clevermarkets.com. You'll find me there. Or, of course, on LinkedIn. Everyone, have a good start into the week. See you around and bye-bye.